What's good, guys? Excuse me. Hope everyone's all good today. All right, so in the stream last night, people were asking questions about certain videos that they wanted me to create so that I could focus on specific elements of the actual strategy itself. And one of them has been a very common theme amongst everyone is working out levels and cycles. Okay, so let's get with it. Okay, here we go. Levels and cycles. I'll be frank with you guys, this is probably one of the most difficult things to establish in the actual hybrid system. All right. This is where you are trying to effectively determine how often the market maker is going to be moving price to the upside or to the downside. All right. Now we understand the cycle as always starts with a peak formation, whether it's a W or an M. Now, if you remember in previous streams how we would draw the W formation like so, all right, please bear with me. Yep, price rises up, comes back down, rise level 1, up, rise level 2, yeah, rise level 3, peak formation, there's the M pattern, up she goes, comes back down, then you've got drop. Then you've got the retrace, level 1, drop, level 2, and then finally all the way back down to the beginning, peak formation, and then it starts all over again. Now, this is the structure, all right? This is the basis of the market maker method, all right? This is how they move price across the board. We start off with the W formation. Rise level 1, drop, rise level 2, drop, rise peak formation, level 1 drop, level 2 drop, level 3 peak formation. All right. Now listen. The basis of the skill is trying to establish where you are in the cycle and in the week and in the level. All right. For example, if we didn't have this part of the chart here, all right, ignore this part of the chart. Actually, I'll make it easier for you. Let's bring it over here. If we were here, we saw a peak formation, price rises up, level 1. Now, the way you determine a level 1, this is important. The way you determine a level 1 is you focus on where price is, or should I say, when it forms a high and where does it pull back to? Does it pull back to a moving average, specifically the 50 EMA? And ideally, you want to base your levels and cycles on the 1 hour time frame. All right. When price stops and pulls back and forms a base, or what we would call a consolidation at the 50 EMA, you are effectively being set up for another move to the upside if you have done the peak formation here. Okay. So price rises, hits a high, pulls back to a moving average, forms a base, notable volume comes in, price comes back up. All right, takes out the previous level, confirms level 1. Then we are working on level 2. Rise, retrace, continuation. If you notice, this is the pattern. The pattern, the pattern, the pattern. It's all we do. Okay, that's how it works. Look at it over here. You have a peak formation, right? Price comes out of the zone and then pulls back to consolidate at the 50. Now you're probably thinking, why doesn't this count? Well, we have to understand when this occurred. This happened at the end of the week, all right? Happened at the end of the week. And to be honest with you, if the consolidation isn't much, all right, there could be an opportunity for it to fail. In other words, the level could actually continue to the downside, retest down here, and then continue back up, all right? So be aware. The longer the consolidation from the last high, or should I say from the first high that is formed out of the peak formation, the better. Notice how we use this level here, this consolidation, to determine level 2. Why? Because look, price came up, hit the high, pulled back and consolidated for a long time. W formation appeared at the 50 EMA alongside with the touch of the 200 EMA. Confluence after confluence is being formed in this area. Okay, and what happens? We anticipate a move out of the zone. Okay, because look, price breaks out, completely takes out the previous level. Now, if you had based your decision that this was level 1 and pulls back, look what happens. Price comes out, breaks away from the zone, but it instantly comes back into the zone. It's not a valid level. Let me say that one more time. You can see how price rises out of the zone, pulls back and consolidates for a while, forms a peak formation, a mini W at the 50 and at the 200 EMA. Both of them are crossing over. The 5 and the 13, if you look, you can see how they're crossing over to the upside. Okay, price breaks out of the zone. Notable volume comes in and forms level 2, forms the break of level 2. Okay, confirms level 1. Level 1 has ended. Now we're ready to make the moves for level 2 rise. All right, notice how over here, level 1, first high, pulls back to the 50 EMA, then breaks out, not valid. Why? Because it pulls back straight away and taps the previous area there. So that level is invalidated. Okay? So always look, in terms of a level, always wait for price to pull back to the 50 EMA and explore what actually happens in that zone. Are you seeing a 50 and a 200 EMA touching, crossing? Is price pinning the lows because they want to tap the liquidity to the downside? Is it ready to move price out of the zone? Are you anticipating on another move to the upside? What is the market maker trying to tell you? Okay, if you pull the chart to the right, you will see when you're seeing price consolidate back, you know from this peak formation here that you are expecting another move to the upside. What happens? It moves to the upside. Then what do you see? Another consolidation period. Price is consolidating, consolidating, consolidating. And then before you know it, it resets. Okay. Notice how the peak formation up here. So when price rises up, see, this is a little bit difficult. Look, price rises up, level 1, retrace, rise level 2. And the next retrace, okay, happens. And it does take out the previous high, but it doesn't last long. Look, price comes up, comes back to the 50, doesn't hit the 50, but notable volume comes in, and then it comes up, takes out the zone, and then instantly starts to consolidate. This notable volume here spikes price below, brings it back up, sort of invalidates the level. All right, and the only way you can determine whether a level is invalidated or not is if price breaks below the previous consolidation. All right. You may need to watch this video a couple of times for it to absorb in, but that's fine. This is why I've done this video. Okay, so you got rise level 1, drop, rise level 2, drop, rise level 3, consolidation. What are we seeing? We're going into the next level, into the next formation. M patterns, head and shoulders, variation of an M. There's your first shoulder, there's the head, and there is your right shoulder. Okay, and then when you draw the M on there, you can see rise. You got the retrace, continuation back up, and then you got price moving down. Okay, here we go to the downside. Drop, rise level 1. Yeah, there's your level. Drop, rise level 1. Level 1 starts here. It ends here. It only confirms when price breaks below the previous consolidation point. Yes, we can see a W formation here. Did it play out? Of course it did. You could have made money on this move, but then it automatically pulled back to confirm level 2. Bang. Price drops, takes out the previous zone. Okay? When it dropped, look at this. When it dropped, it came back down, took out the level and confirmed level 1. But then what happened? It came back down to a notable area. They weren't finished. What do you see? Inverted head and shoulders. All right? Which is what? A variation of a W. So now we have this. Notice how we don't finish the full cycle. And this is what I'm trying to get across to you guys. The cycle doesn't necessarily need to finish straight, a complete rise, retrace like this here. Doesn't have to achieve the whole thing. Market makers can change it as often as they want. This is what I mean, that cycles and levels are difficult to establish, but you have to have flexibility. Don't see the levels and cycles as static. If you see an M formation, don't expect it to go drop level 1, drop level 2, drop level 3. Okay, they can change it up as often as they want. Pay attention to the notable volume. Notice how they already gapped price down. They came and took the level here, rise, drop, took out the level down here, and then they formed a base. They decided to change their intention. They favored higher prices. Look what she did. Rise up, level 1, rise, level 2, consolidation, level 2, consolidation. Notice how this wasn't the level 1 consolidation. This was the level 1 consolidation. Why? Because it spent more time consolidating at the 50 EMA. It tapped the 50. The 200 had crossed below the 50, and the 50 crossed above it. The 5 and the 13 were getting ready to cross over. Bang, price moves out of the zone. We now have a level 2 consolidation period. What are we expecting? Another move to the upside. It's easy for me to say to you in hindsight, yeah, we are expecting a move to the upside, but if you need confirmation of this in real time, go back and watch the previous streams. It's all there. Anyone that wants to disprove this, go back and watch the previous streams. It's all there for you guys. All right. This video has been created for the people who are in the streams and they just need more clarity because they haven't got the time to sit through all the streams to extract the information. This is why I'm doing this for these guys. Okay. But for anybody new, my advice to you is you go and watch the previous streams so you can get yourself up to speed, because you would have missed a plethora of information that I do regurgitate continuously in the streams. But when someone new comes, they always ask the question, where do I start so I can get my fingers wet and, get my feet wet, sorry. And then, work out what I need to understand so that I can be up to speed with the future coming streams. All right. So this is level 2 consolidation. Look how long they spend in this zone, a multi-session consolidation. All right. They come across. What are we expecting? A move to the upside, rise, level 3, peak formation. And what do you know? Drop, level 1, level 2, drop, rise, level 3, drop. Are we anticipating another move to the downside and then get ready for a peak formation? Let's actually look at the real chart itself that we've been doing. Okay, you can see M formation, drop, consolidation at the 50, rise up, fake out, drop, takes out the previous zone. Level 1, okay, level 2. Drop. Level 2 has been an extended move to the downside. Massive W formation currently in play. What are we anticipating? Tap the 50 EMA, retrace, and maybe continuation to the upside. Or alternatively, price is going to drop lower, form another base at or below the ADR. As long as it doesn't, if it takes out this area here, we know we're in a level 3 drop. Then we should see another peak formation down here. But until we see that happen, right now our eyes are fixed on the fact that Bitcoin has come back to the 50 EMA, okay, effectively forming what appears to be the peak formation at the start of the week, anticipating another move to the upside. I would like Bitcoin to pull back ever so slightly, stay above this area, and form the W formation to move out of the zone. Okay, you can see if you've been to the projections channel, you would have seen these are the previous zones that I'm actually looking at for Bitcoin to head back up to. Remember, this is a short-term day trading strategy, guys. All right, I still got my long-term projection of Bitcoin hitting the 65s and the 70s, so that's what I'm looking forward for Bitcoin to do. All right, so is that okay for you guys? Yeah, understanding the key points to understanding a level are as follows. All right. You need to see a peak formation, and we understand what the peak formation is. Where's she at? Where is that chart? There we go. We need to see a peak formation right there. Okay? We need to see the W. All right? Once we see the W, look for the first high that is formed away from the moving average. Price always expands away from the moving average. Look what happens. Price comes up. There is a gap between price and the moving average. It needs to bring price back into the zone. First level is confirmed. All right. Once a high is achieved, then price pulls back. Depending on how long the consolidation is and whether or not it touches the 50 EMA, that effectively establishes your level. Okay. Same again. Rise level 2. To determine a completion of a level, it needs to break out of the zone, clean break to the upside. Okay. When it pulls back, ideally we want to see it pull back to the 50, but if the strength is there, notable volume should appear like here, and it hasn't touched the 50 EMA, and it's continued from that point. You will see that happen, guys. All right. Level 1 and level 3 are normally the hardest to catch. All right. There's always this humming and ahhing moment where, has it touched the 50? Yeah, but it hasn't touched the 50. How does that make it a valid level? You have to be flexible, guys. Okay. You have to be flexible. There have been many instances where price hasn't touched the 50 EMA and it's gone on to make unbelievable gains. Okay, you have to be flexible. But 9 times out of 10, the level is going to hit the 50. Look, here is a weekly cycle. M formation. Price drops. Rise level 1. Drops, takes out the previous level. Rise level 2. Drops. Okay, now you could say that this was a small level 3 down here, but we went straight into the peak formation. Notice we didn't even complete level 3. We went straight down into the peak formation, rise level 1, rise level 2, straight into the M formation, drop, rise level 1, drop, level 2 is confirmed down here. Look, rise level 1, drop, level 2. Then what do we do? Straight into another formation, rise level 1, retrace, hits the 50, rise level 2, hits the 50, rise level 3, peak formation, and before you know it, drop. Regurgitate that in your mind, guys. Keep it going. Up, rise level 1, rise level 2. Okay, that's how you do it. Focus on this pattern. It's not static. They could start the pattern this week with an M, which is what they've done. They could start it at the start of a peak formation down here. They could bring the peak formation on a Friday. Okay? Have flexibility. All right? One more time. The criteria for a level is price hits the high. Okay? Pulls back to a moving average. It will form a base. The longer the consolidation, the better. Because when price comes out of the zone and takes up the previous high, it confirms the level. Happy days. Next moment, do the same thing again on level 2. Then level 3. Level 3 is very choppy. It can be up and down, up and down. There's an inconsistency with level 3 and level 1. All right. Level 2 is probably the easiest level to grab. Why? Because effectively the market makers are giving the retail trader the chance to move price into a zone. It allows all the volume of retail traders who've absorbed that price is in an uptrend, and it allows them to move price. Obviously, the market maker does provide assistance when you see notable pumps in case price does pull away from the range by the retail trader. If anyone gets excited about anything, this actually happens, guys. Yeah. Level 2 is the easiest level to work, realize a profit on. All right. There are strategies that people apply where they wait for level 1 to confirm and they've got their orders ready at the high from level 1, getting ready to take level 2 rise, and then they're out by level 3. All right. There are variations to this to this strategy itself, guys. It's down to whatever works for you. All right. If you have any questions, guys, chuck them in the actual comment section. All right. But don't cloud your mind with looking for a static entry exit. It won't work because there's going to be so many variations. Look what happened at this level 2. Look, yes, we anticipate price to go to the 50 EMA and pull back, but look at this level 2 right here. It came away from the 50, broke above the 200, and it started going higher. All right. See how they can throw you off. It's still deemed as a level. Why? Because price came back up and then it pulled back down. It broke out the previous zone, came back up, and then pulled back down. The only way a level is invalidated is if the previous high is taken out by the preceding level. Okay? Likewise, if this zone is taken out by the pullback from level 2, so if price comes up, pulls back, and keeps on pulling back and breaks below this area, the level's invalidated, the cycle is reset. All right? Pay attention to that, guys. Go back in time and try and find the peaks, the levels. You'll notice that price never actually exceeds the previous high when we're in the level. Do you now, if it isn't starting to click, okay, and you've been watching the streams, if it hasn't started to click already, boy, you've got to get back and watch a lot of work, man. But I trust you guys are on that. All right? I hope this video has helped you guys. Give me your comments in the comment section and let me know if you enjoyed it. All right? Peace.